Well, SoFi has just been on a rocket ship lately, and if you bought in the 4s and 5s, your SoFi position is looking really awesome. I mean, heck, even my bonus buys in the $5 and $6 range just a couple of months ago are up almost 100%. But what about for those of you guys that haven't filled out your positions yet, or maybe you want to buy more SoFi, or you want to start a SoFi position? Is it too late to buy the stock? I mean, basically, has it just run away from you forever? Well, to be honest with you guys, that's actually true, but it's also not true as well. And I know that makes absolutely no sense. So I try and make sense of it all right after you guys hit that like button if you like getting the truth without the hype. And I know that was a lot of stupid rhymes and everything else. I apologize, but you guys are going to get the truth today, and that is the truth. It's true, and it's absolutely not true as well. So with this epic run in SoFi stock, it is true. It is too late for some of you guys out there. So we're going to talk about those folks first, and then I'll give you 3 reasons why it's not too late to buy SoFi stock as well. So I told you guys, I'll make sense of all this. Just stick with me till the end here. It'll make a lot of sense. So the first way it's too late to buy SoFi stock is if you were FOMOing into it. Look, guys, in the end, if you are feeling FOMO with a stock and you FOMO into a stock, you are not only possibly making a mistake then, you are setting yourself up for multiple mistakes later on because you're not buying based upon a plan, you're not buying based upon a price target or any other tangible strategy. You are simply buying with emotion, which means, guess what? It means you're going to be emotional about the stock no matter which direction it goes. When it goes up, you're going to think you're the greatest investor since sliced bread. And of course, if it happens to go down, you're going to start getting panicky. You're going to start feeling edgy. You know, if you happen to buy it, let's just say $10.10, and it happens to fall down to $9.50, you're going to start being like, oh no, it's going to fall further. Oh, and then you're going to go find somebody who says, oh yeah, the chart shows it's going to fall down to the $7.55. And so you start going, oh my gosh, I need to sell right now. And then I'll try to buy back in at $7. Those are all emotional responses to the stock price because you FOMO'd in with emotion in the first place, meaning you're going to make mistakes. If it runs up further, you're going to start trying to think about taking profits because I don't want to lose that money. And all these other goofy things like that I'm not saying are necessarily wrong or anything else, but you're doing it for the wrong reasons. Emotions will drive your investing decisions. So is it too late to buy SoFi stock if you're FOMOing in? I would say yes, because you are just going to screw it all up in the end because emotions are driving your decisions. That's the bottom line with that. I've seen it over and over and over and repeatedly over 25 years in the stock market. That is not a spot you want to be in at all. So if you're feeling like you want to FOMO into it, it's probably too late to buy at that particular stage. Ask all the folks who have FOMO'd into every other stock in the history of the stock market when it went on a run, what happened over the long run. Very few of them actually ended up holding in the end. And the second way it's too late to buy SoFi stock, if you're planning to swing trade it. Now, look, I'm not going to get into discussion if I agree or disagree with trading or anything else like that. There's nothing actually wrong with it. I agree. It, to me, and statistically is proven, it returns less than buy and hold investing. That is proven out statistically. And there's even studies by hedge funds that show that that's actually the case as well. So that does not necessarily make it wrong either, just simply because it's the wrong move in regards to making the most amount of money over the long run. But if you know anything about swing trading, you don't wait until it's had its massive, until it's had a 50, 60, 70% move up before you decide to start your swing trade at that stage. You should have started a lot earlier, basically meaning a lot of the upside is taken out of the stock. It doesn't mean it can't go higher. It doesn't mean we can't see 11 or 12 and you can still swing trade it and make that money. But a lot of the risk has been increased in that trade because we're so late in the trade at this particular stage. There was a low risk of loss at that part whenever it was at $7. Now that we're up over $10, that risk becomes a lot higher at that swing trade. Basically, the margin is taken out of it per se, right? Let's just say the cap of the swing trade was going to be $12. We don't know what it is, but let's just say it runs to 12 or 11 or whatever the case was. Well, you got a lot more wiggle room there buying it, and a lot more upside, obviously, buying it at 7, 8, 9 versus now up over 10. A lot of that upside is basically gone at that stage. And maybe $10 was the top of the particular, trade in regards to the trade itself, meaning you're basically buying the top of the trade, meaning you have very, very little upside, if any. And then, of course, massive downside on the back end there. If I was a trader and a swing trader specifically, there are better trades out there than this trade at this particular point in time, at this juncture of the trade. There's just better trades out there right now. And that right there is where my focus would be. It would not be on SoFi stock. So to me, It's probably too late if you're going to swing trade this stock to try to jump into it now at this particular stage, because a lot of the run has already been taken out of the stock. Doesn't mean it can't go higher, but we're talking about the run and there being better opportunities out there. And right now, as a swing trader, I'd care to bet that most of those swing traders are looking elsewhere now and are starting to look at, they were already had their positions built. They're starting to look at where to take those profits in regards to this stock. And then, of course, what is their next entry point on a different stock, because that's part of swing trading in the first place. So that kind of covers the two big scenarios that I see where it's too late for you to buy SoFi stock. But let's jump over to the other side, because I know a lot of you folks, especially if you watch my channel, long-term buy and hold investor, which tells you, hey, is it too late to buy SoFi stock right now? That's kind of the question that you have as a long-term buy and hold investor. So let's get into the 3 reasons why it's not too late to buy SoFi stock as a long-term buy and hold investor. So reason number 1, the price is cheap compared to where it will be in 5 years. Now, I understand many of you guys were not buying in the 4s and the 5s like me and my group were back in 2022. Maybe you're buying Palantir, Meta. Obviously, there was a lot of stocks on discount at that particular point in time. You can't buy them all, even though we were trying to buy them all. But even this year, even 2023, you had chances to buy it in the $6, $7 range. And obviously this year as well, just a couple months ago, you had a chance to buy in the $5 range again, obviously in the 6s and the 7s for a good chunk of this year as well. I've actually made a total of about 10 buys or so in that, $5, $6, $7 range just this year in regards to SoFi stock. But when I look at valuation, based upon what management's told us, and basically looking at the case for SoFi, which I broke down the full 2-year case there, you can see that it is still cheap compared to what that price will be in 2 years, according to valuation. Of course, Wall Street's going to do whatever the heck it wants to do with it. But in regards to what fair value is going to be, it is still cheap right now in that particular scenario. Yeah, if you wanted to see all those buys and get the bull case and bear case for SoFi and all that good stuff, it's the pinned comment down there, guys. We'll talk about it here at the end. We're not going to talk about it right now. But that right there is kind of the reality that we're looking at in regards to SoFi stock. When I zoom out and I just look at a 2-year horizon, I still, even at today's price, sure, it's not $5, it's not $6, it's not $7, it's not $8. We're up over $10 now, but compared to where we'll be just based upon valuation and guidance in 2 years, there's still a lot of upside. And I would be very, very happy with my return in regards to SoFi stock, even if I bought it today, just 2 years from now, much less 5 years from now, which is really the horizon that I look in terms of predicting. I can't predict out where the stock's going to be in 5 years with any degree of accuracy. But if the business continues to perform, I'm going to be a very, very happy shareholder 5 years from now buying the stock today, despite this big run up. Now, no, it's not the best price ever, and that doesn't matter over the long run. Let me give you guys a quick example here. My initial shares of Apple that I bought, I missed the bottom by 40%, meaning I bought them and then the stock price went down an additional 40%. And I was too stupid back then to add or, buy the dip per se or anything else like that. But guess what? All these years later, just a couple $1,000s over there is worth 7 figures today. So do I feel bad about missing the bottom and not really, having the best average at the time? No, in hindsight, it really doesn't matter that much. I'm happy regardless. So I'm not saying SoFi will execute to Apple's execution over the past 20 years, but they don't have to execute to near that level in order for me still to be very, very happy with buying shares of SoFi today. But I got it. It's run up big, and that obviously sucks. But that leads us right into reason number 2, and that is your patience will be rewarded. Now look, we might not see 4s or 5s again, maybe not even 6s or 7s, but at some point in time, it's going to have a pullback of some sort, just the normal mechanisms of the market. There's nothing unusual there. And for those folks that are patient, especially with this stock, since it is still trader controlled, it's moving out of the trader controlled realm, but it's not near out of it yet. So until we move completely out of that, you're going to see rapid highs and rapid lows. You can look back over the course of its history, and it obviously had a mega run there in 2021. But coming off of that, if you kind of zoom in a little bit, you can see several runs up over $10 before it falls back down again. Multiple runs over the past couple of years have done that. So is it necessarily going to do it this time around? Nobody freaking knows. Nobody can predict the future there. But all I know is that patient investors typically are rewarded over the long run. That not only means patience with holding the stock, but also with sometimes controlling your buys and not FOMOing in or doing any of those other things like that, pushing all in right now because you just want to make sure you catch it before it goes. My guess is we're going to have some sort of a pullback at some point in time where you're going to be able to add shares. Now, it might be right now at today's level. It might be down in the $8 range. Who freaking knows? It's Wall Street. All that I do know is that it's still firmly trader controlled, getting better, but still trader controlled. And we have big earnings coming up here this month. And guess what? When a stock goes on a big run like this coming into earnings, it's not always true, but a lot of the times it's going to need just a blowout spectacular earnings. And that might not still be enough to prevent Wall Street from basically trading that stock down significantly after those particular earnings. So the reality becomes, how much is the question if that particular scenario plays out? And that is kind of the scenario that earnings is setting up for. Now, maybe it trades down into earnings again, who knows? But the point being, if this run continues and we hit earnings and those earnings are not spectacular, blow it out of the water, given the run that we've gotten over the past few weeks or so, it is going to send the stock back down most likely. And I know a lot of this volatility, a lot of this crazy if this and that, and it's going up and it's going down, these moves seem wild and crazy. That's where reason number 3 comes in and takes care of all that. So reason number 3 is you just execute a simple DCA. Look, guys, in the end, it is really, really hard to beat a simple DCA. Put it on a schedule and forget about it. If you did that over the past year, over the past 2 years, over the past 3 years in regards to SoFi, you have a lot of shares of SoFi at a very good price. Yes, you own some at $11. Yes, you'll be buying right now at $10, but you also own a lot of shares at $4, $5, $6, $7, and everywhere in between those particular ranges. So you end up with a very, very nice average overall, and more importantly, a lot of shares all at once, because you had 3 years to build it out, right? Unless you just got a crap ton of cash laying around, you basically need time in order to continue to put money into an investment over time. And that's where just doing a simple DCA eliminates all the headwork, all the guesswork, all the worry. You don't have to do any of that sort of stuff. You just put it on a schedule and move on with life. That's it. That's all that you have to do. Now, if you want to do a modified DCA like I do, where you basically set price targets, and whenever it goes at that price target or below, you go heavier. And then, of course, whenever it gets above a certain level, you stop your DCA. You can do that too, but that's absolutely a more advanced technique. A simple DCA is really, really hard to beat in the end. And 99.9% of you guys out there are going to be very, very happy by just doing that. But if you want to learn how to do a modified DCA, you want to see that SoFi bull and bear case complete with price targets over the next 2 years, you want to see all my buy and sell alerts in real time, get my complete watch list for price targets, get 5 courses free, get your free coaching, use that stock analyzer tool, be a part of the best 6, 7, and 8-figure Discord out there, where we have so many folks who have quadrupled their portfolio, doubled their portfolio, up 35, 45% just this year. So many people in there winning, helping you become a better investor as well. That's what our group's all about. Not trying to 10x this or 10x that or anything else. Solid fundamental investing. If you want to be a part of that, make sure you check out the pinned comment, because if you made it this far in the video, I may have left something special down there for you guys that want to be involved and want to get active with the group. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.